Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to another lovely trading day, retail trading team. I'm Mastro, and this is your routine briefing. So let's jump right in. We're going to start by talking about the warm-up, what we got going on here. Definitely a bit of complex action, but I would say complex in a good way. So I'm excited to be here today and excited to trade. I think we have a lot of potential opportunities as the day progresses here. So as you can see, I'm already involved based on my premise of fading that overnight high. So I took the trade a little early, just because I wanted to ensure I was in, and then I added when we got this nice little shooting star candle. You could actually call that a reversal 3 type candle if you want to be technical. So that's what I got going on there. I'm going to actually move my stops slightly above that before getting started here, and then we're going to jump right into it. So I hope you are all having a nice day, and I think it'll be extra nice if we can get a little test of that overnight low. That's kind of my ideal scenario here, so we'll see what happens. We really have to get to that open first, so the one thing that I pointed out in my little screenshot for anybody who may have seen that on Twitter is that we do have that open drive look, especially now that it's past 10. We do have that bullish open drive yet again. And so the bulls really are in control, I think, until we cross back to the open, and then the opposite does become true. So that yellow dotted line that you see there, dash line rather, is where that opening price is. So I'm going to move my stops here to 96.75, 2 points above that high there, and then we're going to go ahead and get started. So let me just make sure all my various accounts have the same stops and all that other goodness. Oops, what'd I do? That's the issue with having 6 different stops sometimes is... Stand by, please. Okay, so if you're wondering why do I have so many stops, what the heck are you doing here, Garrett? Mastro, rather, I think that's what I call myself on here. So yeah, anyways, you can see the link in the description of this video. You can see that routine day trading strategy, and that is what's going on with these stops. I think you'll understand what's going on there if you read that, and you can find that, like I said, in the description of this video, as well as this warm-up document where I keep all the levels, etc., posted each day. So like I said, today we do have a lot of levels. In the little Substack post there, I'm going to, also known as a newsletter, I'm going to give you the ones I think are most important. You can see that on Twitter right now at Routine Trader. I did post those, just kind of the major point screenshot for the day, as we pop down here to test the open. So I think that's going to be a nice little guide for you. And let me just update this, make sure everything's updated. Yep, everything's updated on that warm-up document now. So if you want to go ahead and check it out, you can see the levels and everything right there. So let me just adjust my stops on one more account. $6.75. Stand by, please. While you're standing by, it'd be really swell if you give this video a like to help with that YouTube algorithm. I would appreciate it, and if you want to make me wait until the end to earn it, I understand that as well. So let's go ahead and jump right in and see what we got going on. So like I said, if you want to view that warm-up document, it is in the description of this video. The most important things from that, I'm going to go ahead and drag it over here, are we do have that down and net short overnight inventory. We did not quite unwind it, so we did not quite fill the gap, and we are still have not gotten below that opening price. So we've tested it pretty much to the tick, so still waiting to see that open drive unwound by popping below it. Until we actually pop below it, the open drive's still intact. So you can see we're a little oversold here as we test it. Wouldn't be surprised if the bulls try to come spoil our party, or my party at least, by popping back up here. But watch that opening price very closely. That's going to be super important to whether or not we see that open drive continue. If we do get it unwound, it's the first open drive that's been unwound, and I believe we've had 6 consecutive days of open drive, and there we go. First day and 6 that we have actually seen that open drive unwound. So that's really exciting for anyone hoping for some two-sided action, I'd say. So besides that, we got that net short overnight inventory. Once we do pop back below and test this overnight low, I think a overnight low trap is a really good thing to look for, because again, we are definitely in a bull market. We're definitely in a strong bull trend for really 100 points still, and I think that's going to be an interesting thing to watch out for there. So these are the levels. That's what I mean. You can see if you ever look at this document, there's a lot more than normal, and I bolded the most important ones for you, and hopefully that helps you out. So that's what we got going on in the warm-up. And we are going to now move on. Sorry, I'm just checking this account. It had slightly different. My first take profit there was 84. I had to make sure it got filled. So now let's look at just the bigger picture, as we always do, and go from there. So why do I prefer, and if you looked at my little notes there, I said I definitely prefer the reclaims once we do pop this overnight low, which is, by the way, pretty close here. It's right at about 80. I'll tell you the exact number. Right about 80.50, or excuse me, 79 rather. So be watching what happens around there. I may close the rest of my position if we do get a turnaround, and heck, I may just flip it around. Like I said, I think it's a really good trade, especially in the market conditions we have right now, which you can see we are still well above that balance. 432 seems to be staying pretty steady. That is the top of the value area, but until we get back down there, we are in state of imbalance. We are above all trend lines, and these yellow horizontals here are just a swing. So really just watching this trend line from the low still, and definitely respecting the fact that it's a bull market, as they would say in the reminiscences of a stock operator. So that's what we got going on the weekly. Daily's a little more interesting, I think. So I'm going to go ahead and expand it while we play around here. Daily's a little more interesting because we do have, again, above all trend lines. We do finally have a little swing high candle that we put in yesterday. I like the look of that. It's one of those reversal 3 candles. Again, if you go to the routine day trading document, you can see all the little pretty candles I look at, and you can see what that usually means. So a nice strong candle there, and I think this area, at least this 450 area, a retest of that is our initial magnet, we'll say. And then really if we get below that, we start selling below that trend line, get back below the October 13th trend line. We do have a really pretty large gap here between 443 and 445, and I think that 443 area remains that downside magnet if there is one, and an excellent buy the dip spot. So that is the bigger picture. Going to watch here. I just had a couple additional orders fill. Let me check the other account here. That one didn't quite get filled. We got the next one at 81.75. So matches the one that we see on the screen here. So again, 79 starts to trade. I'm going to be very vigilantly looking for that turnaround, that overnight low trap there. So before that happens, though, let's talk about one more thing, and that's going to be volatility. Volatility, watching what happens above 1620. Until then, not really too much to talk about. So that is really what we got going on here. So I'm going to go ahead and call that a routine briefing for today. The newsletter and all that content is going to be pretty helpful to you, I think. So if you're not a subscriber, please go ahead and go to retailtrading.com and get subscribed to that. I'm going to package all levels up, and you can also see that warm-up document, and once again, everything else in the description of this video. So besides that, if you want to engage on this video itself, that would be awesome. I'd appreciate that. Or on Twitter at Routine Trader. You'll find me there until my 11 a.m. curfew here in the next 50 minutes. But I'll probably go a little bit longer if we got some runners, and if the trading conditions are really good and I'm still in a trade. I will not take any more trades after 11 a.m. as that is the rule that prevents me from blowing up. So that's always nice not to blow up. So if you stayed this long, you enjoyed the video, I'm going to once again ask for that like to help the YouTube algorithm. And I appreciate your engagement. I appreciate your attention regardless. And I hope that you have an excellent rest of your trading day. And stay classy.